my dear students. Welcome to my channel. This is Geeta. Today we are going to see mock test series 2, December 2025, which was published on 29th, December yesterday. Okay, let us see without wasting much of our time. Question number 2A for 10 marks. The machinery account of a factory showed a balance of 95 lakhs on 1 April 2024. The books of accounts depreciation is written off on 31st March 10% per annum under diminishing balance method. On 1st September 24, a new machine was acquired at a cost of 14 lakh and 44,600 incurred on the same day as installation for erecting the machine. And on 1 September, same year 24, a machine which had cost 21,87,000 on 1 April 2022. This is very, very important while you read the question. A machine which had cost 21,87,000, 21,87,000 on 1st April 22. It was sold for 3,75,000, and another machine cost 21,85,000 on 1 April 23 was scrapped on 1 September 24. And they are asking you to prepare a machinery account. So you understand that the machinery account which is maintained is showing a figure after charging depreciation. So you understand that whenever you are preparing a machinery account, so what you do, you just bring the book value, whatever you have paid to purchase a machine. Just for understanding purpose, I am showing you. To bank account. Suppose you are buying a machine for a certain amount. What you do? You put the value here, and then at the end of the year, whatever may be, here the year is 31st March, then you are going to depreciate it every year on 31st March by depreciation. Whatever the method and percentage is given, we are going to depreciate the machine. Now the next year on, for example, this is on 22. Let us take it as 22 April. So we will be charging depreciation on 31st March 23 because the calendar year will get changed. Then on April 23, you will be having the value in the machinery account, that is the book value after deduction of depreciation. So first you understand that, suppose for very simple example I am taking, it is 10,000 and you are charging 1,000 rupees as depreciation, then your closing balance will be 9,000, and this 9,000 will appear in the next year beginning. So you understand, first on 1st April 24, the value appearing as 95 lakhs is after charging depreciation. All of you know that depreciation is a charge against profit. Ma'am, what is the meaning of charge against profit? Charge against profit means whether you earn a profit or not, you have to charge the depreciation. You have to deduct the depreciation. It is both as per Income Tax Act as well as your Companies Act. Everyone must charge depreciation on fixed assets, whether even if you are at a loss, the depreciation has to be charged. The loss will become more to that extent. You understand? So it is, they have not told you anything else. It is only a machinery account. If it is told us that they are maintaining a provision for depreciation and there is a machinery disposal account, then the figure which you are getting, it is a cost figure, which is the original cost of the machine or asset. But here it is not like that. Here they are simply saying that they have maintained a machinery account and it showed a balance of 95 lakhs. This means after total depreciation charged up to 31 3 2024. Okay, this is as on 1 4 24. First, you understand that. So, first, let us take the two machines which they are going to either they are selling it or they are going to scrap it. Scrap means putting it in the waste. Scrap is a waste. Okay, and they have not even scrap. Sometime will fetch some amount. Suppose if you are selling your old newspaper, it is a scrap for you, and you will be getting some 50 rupees, 100 rupees, whatsoever the case may be. But here, even after scrapping, no money is realized. It realized nothing. So the total machine has become useless and it is scrapped. Okay. So first what we have to understand, we will take this machine as number one machine. Both the machines were scrapped or sold on 1 September. So let us leave that date first. First let us see the cost. The original cost or acquiring cost is 21 lakh 87,000 on 1 April 22. This date is very, very important. But here the value which is showing 95 lakhs in this value is not there. This value is as on 1 April 22. But here it would have been after depreciating for 22, 23 and then 23, 24. Okay, that value we have to take and subtract from this because we have to remove these two machines from this. Understand that? So what I have to do, from this 21 lakh 87,000, I must find out the book value as on 1 April 24. Okay, so first you have to prepare your working note to find out the book value as on 1/4/24, so that we can remove that machine from this 95 lakhs. Okay, so first, for your convenience and saving the time, I have already made the working so that I need not to waste the time. First, let me make you understand that. So on 1 April 22, the cost of the machine was, let us assume it is as M1. It would have been easier if you take like this. Okay. So 21 lakh 87,000. And the depreciation is 10% method, you should remember. They have already said it is diminishing balance method, or it is called as WDV method, written down value method. So 10% is charged uniformly every year. Okay, so 10% means we can remove 1 0 straight away, write the amount. So no need of calculating that. So 2,18,700 would have been the depreciation charged already. They have charged. So what was the book value as on 1 April 23? This is on 31st March 23 because the year closing is 31st March every year. So on 1 April, they have given us the cost on 2022. See here, 1 April 2022, which had cost 21 lakh 87,000 on 1 April 2022. Okay, don't think that it was sold on 1 April. It was sold on 1 September 84. 1 September, sorry, 24, it is sold for 3,75,000. This had cost 21 lakh 87,000 on 1 April 22. So for March, we have to subtract the depreciation charge, which has already been done. Okay, 2,18,700. Now the book value as on 1 April 23 is 19 lakh 68,300. Again, they would have charged the depreciation as on 31st March 24. That is again 1,96,830. Now this is the book value on 1 April 24. This amount is included in your 95 lakhs. They are showing us, sorry, they are showing us 95 lakhs is your, sorry, 95 lakhs is your book value as on 1 April 24. In that, this machine, M1 machine, costing 17 lakh 71,470 is inside that. So this is the book value we have to remove from that 95 lakhs. That's why I have did the marking. Okay. Next one. Now I wanted to continue it because this machine was sold on 1 September 2024. Here there is a comma. A machine which had cost on 1 April 22 was sold for 3,75,000. But now this is sold on 1 September, not on 1 April. The book value is on 1 April. You understand that? Okay. So in the 95 lakhs, the book value included is 17 lakhs 71,000 something, which we are going to remove it. But this machine is not sold on 1 April. It is sold on 1 September. So during this 24-25 also, it was there in the factory for some time. So we have to charge the depreciation up to September. That is for 5 months from April to September. So again 10% from April to September, it comes to 73,811. So now the book value as on 1 September 24 is 16,97,659. Out. This is the book value, but the machine is sold for only 3,75,000. We have received amount in the bank account only 3,75,000. So the balancing amount is a loss. So that has to be booked into your profit and loss account. Okay. So hope it's very, very clear. Now we have to remove for the balancing figure. We know that how much we have to remove from 95 lakhs. From 95 lakhs, we have to remove 17 lakhs 71,000 something, that machine number 1. Now we have to remove the machine number 2 also, because another machine is 21 lakh 85,000. The cost of that on 1 April 23 also scrapped on 1st September, and it realized nothing. So we should again work back to find out the cost as on 1 April 24. Okay. So this is given as working note number 2, cost of the machine of M2. I'm just for convenience, I have taken as M1 and M2. The second machine was 21 lakh 85,000 on April 23. So on March 24, we have to depreciate it 10%. So that comes to 2 lakh 18,500, and the balancing figure is 19 lakh 66,500. This is the book value on 1 April 2024. This has to be removed from 95 lakhs. Now you understand, this is included in 95 lakhs, only the value of 19 lakh 66,500 in respect of machine number 2, and 17 lakh 71,470 in respect of machine number 1. Only this amount is inside that. So we have to remove both the book value from 95,000. Then both the machines we have to charge depreciation up to September. For convenience, I have made like this so that it will be very, very easier for you. So first you remove the book value from that. Then we are going to sell that machine not on that same date. We are going to sell it on September. Okay, no issue. We will be charging the depreciation for 5 months. Okay, then we find out the book value and how much it was sold and what is the profit or loss. Clear? Hope it's very, very clear. Okay, so let me continue. So the depreciation for 5 months up to 1 September comes to 81,938 rupees. So the book value on September 1, 2024 is 18 lakh 84,562. Since the machine is scrapped and it has not realized any money, this total amount will become a loss and will be taken to profit and loss account. It will be charged to P&L account, 18 lakh 84,562. Okay. Now coming to the book value. Book value is 95 lakhs. And now we found out the value as on 1 April for machine number 1 and machine number 2. Now we are going to remove both the machines, and remaining machines were there continuing in the factory itself. So first I have removed the machine number 1, the book value. Then I have removed the book value of machine number 2. So now the remaining balance, book value of the remaining machines were 57 lakh 62,030, which were in the factory and continued till 31st March 25. So we have to depreciate on this value 10% for the current year. Okay, this will be 5 lakh 76,203, and the closing balance of the remaining machine would have been 51 lakh 85,827. In the meantime, they have purchased on September 1 during this current year one more machine for 14 lakh, and they have spent 44,600 on installation for erecting the machine and installing it. Any amount spent on the machine till it reaches its place, including the trial run, everything has to be capitalized. You understand what is the meaning of capitalization? It is not to be booked as an expenditure, revenue expenditure. Rather, it should be totaled with the original cost of the asset so that it becomes the capital expenditure. Clear? So 14 lakh 44,600 becomes the cost of that machine. Okay. Now on that machine, this machine is now continuing from September till the date when I am booking the depreciation, that is on 31st March. It comes to 7 months. So the depreciation is charged at the rate of 10% per annum for 7 months. Clear? So now the book value, what would have been remaining at the end of 31st March 2025, or you can call it as on 1/4/2025, for this particular machine would have been 1363,332. This machine and this machine is continuing. So what balance we would be carrying? 51 lakh 85,827 plus 13 lakh 60,332 will be your opening balance as on 1 April 2025. Then it becomes easier to prepare your machinery account. Clear? Hope it's very, very clear. And still, if you have got any doubt, please feel free to write in the comment box so that I'll be able to make you clear. Okay. So machinery account, first you write debit or credit, then date, a particular amount, etc. What the balance brought down was given as 95 lakhs. Okay. Now what I did for easier purpose, you just remove the total value of that machine. What is that value of that machine? 17 lakh on that date. 17 lakh 71,470. This is included in this 95 lakh. So remove that depreciation up to September. Then what is realized in your bank? Then balance what you are going to book in your P&L account. We have already shown it here. 13 lakh 22,659 will go to your P&L account. So the total will give you 17 lakh 70,000 71,470. I hope so. Yes, 17,71,470. Next, I have removed the second machine. Then your balance will tally so easily. Second machine, there is no value realized. Only we have the book value we found out, that is 19 lakh 66,500. Sorry, 19 lakh 66,500. Out of that, we have charged the depreciation, and the balancing figure has gone to your P&L account because it is not realizing any value. So 81,938 plus 18,84,562 will become 19 lakh 66,500. This was the value included in this 95 lakh. So now we have removed both the machines. Now for the newer balancing machines, I put the depreciation 5 lakh 76,203, and for the newer machine for 7 months 84,268. And now the balancing figure which we will be carrying in the machinery account will be 51 lakh 85,827 for the remaining machines, and 136332 will be for the newer machine, and total will be shown on the outer column. This depreciation also you can show it here. I have no space, so I just showed it on the outer column. You just show it because this is for the current year depreciation. You can show it like this. Why I broke up these things like this, so that your balance will get tallied without any problem. That's it. So that this side we have put the balance brought down, and bank account 14 lakh, and again to bank account what was the spent of installation charges for erection. The total has matched. Hope it's clear. So please do not forget to subscribe my channel and leave your comments, whatever may be the comments. Please leave it, because we are taking so much time and energy to prepare a video, so that you get clarity about the concept, as well as how to proceed with the sums so easily. That's what my motto. And keep learning. Thank you for watching my videos. Thank you.